mask. So, all right. So, welcome back, everybody. Welcome to a whole new year of trading in 2026. We are lock and loaded. It ain't like the skill went anywhere. We just right back at it, and we getting ready to get the bag all year long. All right. So, thank you guys for tuning in. We're gonna get straight into it. Now, before we do start talking about the technicals, we need to talk about the psychological. Um, the last couple of years, the last couple of days of the year, the market definitely has some volume, and some of it was unexpected. And it does cause you to take a few trades sometimes because it's like, dang, you're still giving out pips. I definitely was one of those people. I took a few trades. Some of them was okay, some of them was not too good. And it reminded me of the fact that like it doesn't matter who you are, how long you've been trading. Sometimes when you say you're done, you might as well just be done because one of the things the market likes to do is towards the end of the year, even if the volume is good, you don't always know when the volume is just going to slow down or start wicking out or giving out mixed signals, which still ended up being a reminder that like the best market conditions that we operate in and we have the most edge is usually the market that we know best. And if we're operating in market conditions where we don't know what the outcome will be, typically it throws us off our edge. Now, it didn't even matter if it was the end of December. How many of you guys have experienced a lot of different market conditions in 2025 that sort of, in a way, helped you to realize, okay, these conditions are not for me. This is the area where I know for sure these trading conditions did not help me? Or did you find out in last year what conditions where your edge was and where your edge was not? You see where I'm coming from? Did you guys at least figure out what market conditions worked best for you and which ones did not? I just want an answer, yes or no, in the chat, just to keep the engagement going. I believe this is one of the biggest things that's going to um, make us or still come up short in our way of thinking when it comes to trading the markets. All right, I got an answer from Christine, said I found my edge. Good, good, good. All right. So I'm sure a couple of you guys will be answering or participating, but we'll just go ahead and continue. We're gonna go and share the screen real quick and break down the first asset class that we all know that I'm gonna talk about is gold. All right. Um, Before we get into the current price action, let's talk about how gold did not fulfill the full expectations of us going to the moon, touching like anywhere above 4,600. Gold definitely was one heck of an asset class last year. We crushed new highs like almost every day, almost every new week. But the amazing thing about looking in the past is being able to see certain things that we didn't get to see or uh, things that we also need to be aware of going into the new year. Let me go ahead and check the chat real quick. Yes, I know like Q1 and Cuba, the summertime tracing not the best in my opinion. Good, 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 good. I did not find my edge, did not trade enough. Okay. Well, at least we know what we'll be doing this year. Trade a little bit more. Trade a little bit more. All right. We got Brandy said binary trading and pocket options broker definitely had. Uh-huh. Yeah, switched to Forex around end of the year and haven't looked back. Been going well. Paper trading, spot gold ever since consistently so far. Okay, cool, cool. Fire, fire. Q4 and Q1 is the best. Jaquel, summertime trade is not the best in my opinion. You are spot on, which brings me to some of the things and nuances that gold has given me which I was very glad to experience. Doing webinar, Brody. We'll talk later. Yeah, yeah, yeah. All right. So, guys, as we were saying, the summertime definitely sent a lot of false nuances in the market, which reminded us why sometimes like it's very important to know how to trade certain seasons. For example, in 2025, which still sounds crazy to me, the market had a pullback in April, and that was caused by like the tariffs and things like that with Trump. But from what we noticed since December of 2024, that did not stop the bullish rally that gold had coming. We've seen new highs like we ain't never seen before. Now, on a daily time frame, we can see that February had pullbacks towards the end. And in the first week of March, we saw that price gave us the usual 2-day retest. So, meaning the market came down to retest the man zone twice, and that caused the market to have a strong foundation to rally. We saw that a lot in 2025, along with the end of 2024. We also saw that um, end of November, usually started the best rallies. In 2024, we saw it happen towards like end of November, first week of December. Um, but one thing that gold has done that I'm definitely carrying this lesson into the new year is never underestimate when price makes it to a recent high. There have been times that I thought price was just going to keep pushing since it's bullish. And to my surprise, it'll make it to a recent high from the last time it revisited. And instead, gold decided to pull back and not only just pull back, but pull back very deeply at the point of interest or the demand zone from like the beginning of the month, the origination point. So I was like, you know what? Yeah, we can't sleep on seeing how gold behaves when it comes to price reaching recent previous highs. So going into April, we saw that the market bounced back, made a new high end of April, pulled back in. Price pulled back in during May, pretty much stayed stagnant within this range here. And this is the summertime price action that Jaquel was talking about. We finally had gotten some action out of this breakout. Once price came down to retest the beginning of August by the end of August. All right. Finally, we saw August picked up price action.
The other people are doing great for you so far. And
so there were times we was expecting gold to take off, and it didn't. But we noticed towards the end of a month like August, as Q3 was transitioning into, well, it was still in Q3. End of Q3, for example, we started seeing the rally that we were expecting. Now, here's the funny thing about this. Sometimes when we're going with seasonality and the way we're anticipating the market, it came to a surprise that even in September, gold was still rallying crazy. When we thought most times that in September, the market usually makes a pullback, but it didn't. It did not. However, we still noticed that by the end of September as well, price kept on buying. So one of the key things I want to emphasize is that we definitely picked up some more gems and behavior out of gold that a lot of traders sometimes we sometimes we're expecting a move, not realizing that the behavior of the asset class tends to move the best by the end of the month, well, not just move the best, but rally the furthest by the end of the month of certain quarters. I'm not sure if you guys had peeped that last year. You would notice that the end of the month, price will either come back and retest the middle of the month, or you would notice that it would rally the most towards the end of the month or certain quarters. So we have to be careful expecting certain rallies when really the rally finally ends up happening towards the end of the month of the quarters that have the most liquidity. Here's another example. We saw a crazy rally in October. That's when price literally broke into 43.75 and we're like, "Whoa." But even towards October, going down into the 4 hour time frame, you guys remember when we caught like 1,000 to 1,300 pips when we started picking up on how gold will rally on Sundays. Y'all remember that, right? And so we started getting ready for these Sunday entries, which caused many of you guys to catch the most pips you've ever caught in your entire trading career off gold. And I was one of them, and we were very much happy about that. But what happened when price once again tried to retest the previous high? They lost volume on the 4 hour structure and they sold back down surprisingly further down to what we had anticipated. So I'm sure this has brought to some of us certain losses, and anticipations were a bit confusing. So this type of market condition definitely told us that it's not just about hopes. It's not just about the analysis that we have. It's also about risk management and knowing when to bail out. I learned a few times that like just because you can stomach certain losses doesn't mean you should stick around to find it out. All right. I think going forward into this year, we need to be a lot more um, aware of the percentages that we don't need to have to worry about stomaching through. Instead, we have guardrails. We're like, hey, you know what? The account size is this much. Man, the maximum loss we should take overall from this account is, hey, 15%. Doesn't matter what's going on. We see a 15% or maybe, I don't know, 10%. That's up to you, right? The drawdown can't get too far so that way it doesn't take us so long to recover. There's been times I've learned that the hard way. I'm not trying to lessen something that I've done better at. Is just sometimes I've learned the hard way too. All right. Now, going into the end of October, what did we see? We finally saw the rally that we wanted, and it still came with another retest in the first week of November. So this proves the fact that many times that we need the market to rally hard, we have to be careful on the anticipation. Most times it's around the end of the month slash the beginning of another new month. All right. Now, November, we saw that the same situation happened. Price came back towards the end, retesting the middle of November. And finally, once they found like a solid grounding, they were able to buy. Now, this sounds very simple in hindsight, but we all remember how there were times in November where like price would literally just wick us out. So it's not always smooth. We know that, but it doesn't mean that there was not any good opportunities. Now, fast forward into December. I think December and what was it, July was probably one of the worst market conditions the first couple weeks of December for gold because like at a certain point we couldn't tell if they'd be selling off a little bit more or if they'd be breaking out because there were times where even myself, I was in buys right here. thinking price was going to keep buying, and then just one candle push price back into the lows. Um, Now, as far as the middle of December, we still saw a crazy rally in the market once it made it to uh this new high. We saw that they tried to push up one more time with 2 Sundays ago, if not last Sunday. Yeah, I think it was last Sunday, and they lost volume. So when price does make new highs, we have to be careful how long we stay in it. All right. Because once we get price to try it one more time at retesting the recent high, it's best to secure your profits, close out, and wait for a potential retracement. Okay. Is this all be making sense to you guys? Are we all familiar? I'm sure we've all experienced many of the rallies that Gold has given us last year. Does that sound accurate to what you experienced? All right. Moving on. This particular week, um, I am seeing that there could be a potential rally. However, uh, it all depends on how price breaks structure tonight. All right. Shout out to some of you guys who are already in gold buys. I think it's a phenomenal buy. And obviously the exit, which is the safest, is looking around 43.97. We might see a continuation because there are some things going on in the world right now, which is uncertain times, which could cause a continuation rally from gold. Okay. What is it? Well, we all seen it. We couldn't even ignore it. We're talking about Venezuela. Uh, the gangsters and polices of the world have once again made another chess move to ensure their position as the most powerful country in the world still as of yet. I'm not gonna get too far into it, but the the decision that they just made here and uh and acquiring the oil barrels from Venezuela definitely might put in a lot of liquidity in this market. All right. So so we all know gold and the institutions that we know inject money into the market. Oh, Gabriel says go more in depth. Um, so okay, I'm not gonna sit here and be an expert, but one thing I have been doing the past 24 hours is understanding what has been going on in Venezuela. Um, the United States decided to take control of Venezuela going forward. Um, the real reason is oil. They had the perfect reasoning though, which is, oh, there's drugs and narcotics and things going on, and a lot of dangerous interchanges with the government versus the drug dealers, and so much corruption going on over there. And of course, the United States always does what they do best, and they say, hey, you know what? Sounds like it's some democracy that needs handling over there. We're gonna take care of this because your people have been suffering for a while, and they have in Venezuela. Not that we know we don't have problems over here on our turf, but the real reasoning that pushes the United States more is the control of oil. Having access to more oil, as Venezuela is one of the largest reserves of raw oil on planet Earth. It was very important as we're trying to make sense of this economy, the way we are seeing interest rates have been in a dire need to decrease. The feds are looking to once again like keep decreasing um, where we at with interest rates, and we need oil and energy for AI. We need oil and energy for money to be made. And also, if there's war, then there's even more money to be made. So, what does that mean? In times of uncertainty and war, we know which asset classes will be pumping. One of them being gold. The second one also is silver right now because of all uh, the energy and nuclear needs and necessities for advanced technologies. So, of course, silver is on the radar. Am I going to be trading silver this year? I'm not too sure. I don't like to just jump into a new asset class all of a sudden. I like to um, stick with what I know, especially if it works, right? The second asset class that we all know will be pumping because of all of this money play going on in the midst of the corruption is US 30. Now, US 30 has not been the cleanest. Let's talk about it. But there's also setups and behaviors that we need to emphasize. The same thing we were talking about with gold is the same behavior with daily and 4 hour structures being retested. Many times we'll notice that US 30 will make it to a 4 hour structure high the second time around, and they'll rather mitigate. They'll rather come in, not make a new high, but make it to the recent high and pull back inside the range. So we have to be careful when we're taking certain trades and expecting a certain thing. Um, but we need to still be able to understand like why we shouldn't just stay in a trade for that long just because we're expecting a new high to be made. You know, we still have to learn to become more visually ambidextrous. Some of us still aren't too good at taking sell trades or knowing when the sell is coming, you know? Um, but as we can tell, the correction definitely happens more often when price tries to retest a 4 hour high. At the same time, we know the same behavior happens when the market comes down to retest a 4 hour low. What happens when the market retests a 4 hour low for the second time, for example, you usually tend to see price rally once it's done doing that. You guys get me, right? So we have to be very clear on behavior because sometimes that's what catches us slipping anyway. It's like, man, I'm gonna stay in this trade. It looks good. And you forgot the little rule. You know what? Price is getting closer to a 4 hour high, man. You know what? This is the second time it's coming back to that recent high. Yeah, I need to get out because typically we've seen it from historical data that when price makes it to, a 4 hour high for the second time, ten, things tend to retrace back. So now we don't have to deal with unnecessary losses when situations like that present. We'd rather maybe wait, see about if it's going to react, things that things like that. All right. Now, Gabriella, you're welcome. Let's go ahead and talk about NASDAQ. Now, we all know NASDAQ is the baby brother of US 30, right? NASDAQ and US 30 will always be bullish pairs, right? Whenever they do retrace, of course, we know that at some point when they do find the 4 hour low, they're going to start rallying back up. Why? Because we have people and institutions that have billions of dollars in asset management, and their strategy is simply to dollar cost average for their clients. And every time they find a good demand price where they can negotiate where they add their shares, they're always going to get a better feel at the spread that they provide them. So this is what allows a lot of institutions to get in early or get the best fill. Y'all with me? So when price actually does that, you'll notice there's a lot of usual reaction and accumulations from 4 hour structure demands. And a lot of exits usually happen at 4 hour structure highs for the second time, like when they come to revisit that price. Now, one thing I don't like about NASDAQ is how sometimes you might catch a nice buy trade and all of a sudden it loses volume fast. But it's not just by coincidence, and um it's not always what's the word? It's not always something you couldn't have seen coming, you know? Why? Because of the same thing that happens with 4 hour structure behavior. Once they start getting closer to recent highs, don't try and be the savior or the last trader standing. Okay. I personally think NAS trades the best when it finds itself a 4 hour structure low. Everything in between up there is usually questionable. All right. How many of y'all took hella losses from NASDAQ all because all of a sudden price just like sold and you're like, bro, what happened? So my anticipation with NAS is for sure waiting to see the areas where price would find a better demand zone to buy from. Now, last year I did share with you guys certain things that helps us to see better with anticipating when, let's say, a pair like NASDAQ or US 30 plans on buying. And we talked about the VIX, the volatility index, volatility is of the S&P 500. And we talked about the S-Dow. Okay. Now, how do we use these? Daily and 4 hour structures usually come back to retrace into the supply zones, which is a direct correlation, inverse correlation with the indices. Now, from the beginning of time, you can see the S-Dow, all it does is buy back to, wouldn't be crazy if I wasn't sharing my screen. Okay, but all right. Wouldn't be, no. Yeah, so all price does is it comes back to retest old highs no matter how extreme they are. Every time they do, you end up seeing that price returns to areas where it used to trade from. And from there, this honestly helps in knowing where the best areas of reversals are for the indices. Now, I know this is a game changer for a lot of people because it'll help you to get better positioning for swings in long-term positions, even in your portfolios, right? So with the S-Dow, you'll notice every time price came up to retest a supply zone that was valid, they would retest it and sell off. When you go back looking at US 30, you'll notice many of those areas were demand zones. All right. So it's not a coincidence at all. These these are metrics that, OG traders actually use just to have their edge in the market. Hmm. All right. So looking at the NASDAQ from a daily perspective, we can tell it definitely looks like a correction might be coming. All right. Whenever you can't tell if the structure makes sense, 90% of the time it's because they're going to try and reach the recent high, and instead of breaking it, they sell off. All right. Let me give you guys another example of what that looks like. Just last week, the market started off, yeah, Friday We started seeing the market rally from Thursday night. And then Friday morning, by the time pre-New York showed up, market just tested these highs. And what did it do? It sold. All right. Now, it's the same situation going on right now. Sure, the market is rallying to the upside, but is it really going to crush and break this structure? We don't know. And until it does, we can't make that bold of a prediction just yet unless we get a break and retest. So going back into NASDAQ, if I see price is pushing back into a high like that just off of one leg, my bias usually is to react once price makes it to the recent high. Because from there, I know by the next session, I know what to expect. And my anticipation, unless price breaks that high, will be to take the counter trade sell. Does that make sense? My goal for this year is to make sure that um, many behaviors are more understood by our community, because the more we understand behaviors, the better we'll trade. The more we understand ourselves, the better we will perform. For example, um, in this very moment, a lot of people are coming into a new year with the mindset of, man, like this better be my year, but I took so many losses, or I still don't know myself on the charts. And my answer to that is like, whatever your performance was last year, you gotta you gotta embrace your own data, because had it not been for this performance, you wouldn't know what you need to work on. You wouldn't know where you weigh on the balance sheet. Consequently, going into a new year now, we know exactly what needs to be worked on. It's a lot of accounts that were either blown or challenged accounts that have so many sets of information that you could literally put into Chat GPT and say, hey, Chat, I'm going to export this file from my recent prop firm account, for example. What do you see? What can I change? What can I implement better? And it's going to tell you, down to your winning percentage, what that means, certain losses, the percentage of losses or your losing streaks, or what typical days does that usually happen. Like, be proud of the fail forwards that has brought you here. Okay. I highly recommend you guys really take some time and not just back test, because it's not always going to help in real time. Instead, go take your data, put it in ChatGPT, ask it to analyze where your improvement points can be from here. All right, guys. So now back to the technicals. I wouldn't trade aggressively this first week of the markets. At the same time, I would pay attention to how price reacts when they make themselves when they reach those recent highs. All right. Because right now, when you see structure like this, the best thing it does is it just makes it to that high and sells back down. All right. So we'll definitely check in tomorrow to see how price behaves from here. Now, going back to US 30, I believe they made a pretty good structure out of this demand zone. Haven't gotten a chance to get in yet because I believe this dip right here happened, yeah, Friday, January 2nd. But it has a very likely chance to retest this low again. And this could be the beginning of a bullish rally that could even more so make another new high. I wouldn't be surprised if we touching 49,000, 49,200, and this and so on and so forth. All right. Now, let's go ahead and check Forex Factory real quick just to see what is to be anticipated for the week. Gold price forecast for Venezuela. Trigger next gold rally. I'll be honest too, with what we were saying earlier. Sure, we understand that gold could rally, but let's not fall into that same thing where I believe it was July. Y'all remember when there was like the situation going on with India? There was like this war that just bust out of nowhere with India, and we thought because of it, gold was just gonna rally, and it didn't. Instead, like it sold. Yeah, let's not be too reactive when we are hearing, oh yeah, there's war. Oh, that just means gold is gonna rally. When in um in hindsight, whenever we did see that price did rally, it was towards the beginning of the month or the end of the month, guys, based on what we had just back tested. Checking to see if you guys are paying attention. Most of the rallies that we noticed happened last year. Was it towards the beginning of the month or the end of the month?
The end.
Correct. Who said that?
It's me, bro. It's Manuel.
Bet. What's up, bro? I didn't even realize you was on the call.
Yeah.
Yeah. So before we anticipate something, we got to make sure at least the 4 hour structure lows are well retested. That's number one. Number two, we have better chances of seeing rallies towards the end of the month um, when it comes to certain quarters with gold. All I'm saying is if we see like price rally wildly um, with gold, it could happen. But just anticipating a rally because we hear, oh yeah, there's war or there's uncertainty, let's not fall for it this time of the year. Okay. Now let's talk about some of the fundamentals to drop this week. We got ISM manufacturing. Okay. There's still some big holidays going on, but that's with the euro.
Got NFP.
Right. Got NFP. Let's see if we do have NFP. Okay, we got the Jolts job openings for sure. Gonna see about how the job market is still looking. Last month, we surprisingly came out looking pretty okay. That was surprising to me. Very surprising. We got unemployment claims on Thursday. And then on Friday, hey, Quells was right. We got NFP back. So does this mean the government is fully active? Does anybody know?
Is the government open? Oh, you don't know. Is the government open now? They opened it back? Huh? They did? My husband said yes, so they're keeping on top of news.
Yeah, I know she does. All right, let's see. All right. Washington, D.C. area status open. Yep, federal agencies in the Washington, D.C. area are open. Employees are expected to begin the workday on time. Normal operating procedures are in effect. This was posted on January 4th, which is today at 1 in the morning. This is by the U.S. Office of Personnel Management. All right, this is a government website. Okay. So yeah, this proves that yeah, we got the government back open. Yeah, we'll see about everything, right? So this week definitely might start out a little slow. Um, but I'm sure there will be opportunities. for sure. All right. Now, yeah, Friday definitely has a lot of volume that might be coming in because of non-farm payroll and preliminary consumer sentiment. All right. Now, what is my overall outlook on gold? I'm still going to be paying attention to see if price does break above this high. If it doesn't, we might be taking some counter trades. I'm not gonna lie to you guys. Counter trade sales might be a possibility. Because another thing is too during New York sessions, gold time and time again has shown this behavior towards these last couple of weeks. You'll notice a beautiful rally. Let's talk about this a little bit more too. The past couple weeks of gold, we'd see like dips and reversals um that honestly was hard to catch. Sells off, boom, trying to see if price is going to bounce twice, and it just rallies. Not only does the candle just exhaust, it's like you should have been right here ready to catch the falling knife. And no one is as good as catching falling knives unless you had like maybe a pending order or something like that. Uh that was annoying. Uh but we would notice that the reversals, even if price would buy, we noticed like reversals would happen um even during the session, right? What else? What else? What else? What else did we peep? Yeah, we see sell-offs that were still somehow, my bro, it's Alex. Alex who? Yeah, so yeah, we would see the market like, retesting London lows and such, which is cool. Oh, that other Alex. All right, let me put my phone on do not disturb. There's too much activity going on. Uh, we noticed that like 11 a.m. price would still do reversals. We see price sell off, but the range was very tight. And this is one of the things we need to focus on, understanding when the market conditions shift a little bit. Uh, and many times when you do notice out the week that the market has shifted or it's not given too much trendy moves, your best bet is to catch those London retests, you know? And nowadays, a cool London retest could give you about 150 to 300 pips. So this is why sometimes like it's tough for a trader to just say, "Oh yeah, I knew that call was coming. Thank goodness. Thank goodness I put on D&D. I be knowing some people, man." Uh, 1 second, guys. All right. A lot of times when we're peeping the market giving us choppy conditions, if you can't just catch a setup that's just retesting the previous London low and previous London high, you just gotta leave it alone. You just gotta leave it alone. All right. Now, some of the things that can throw us off is this the way the wicks would set us up, right? I remember there's been times I was like in certain buy trades and I'm like, okay, I caught the bottom, stop loss below the low, it's going up. Price makes it here, loses volume. I'm like, oh craps, damn, we're going down. Candle starts to actually go down, stops right here, turns into a bullish candle again. Listen, if those are the conditions where you took a loss, There is absolutely nothing else that you could have done. I'm just here to tell you that. In a world where you're just trading your setup, we can't always anticipate candles to be so confusing to the point where we're not sure if it's going there or not. You might try one more time with a second attempt, but don't try to make too many attempts. All right. Now, I know I'm speaking to somebody because let me tell you, it's so hard sometimes too. You're like, all right, maybe now it's finally got some sense. Let me jump back in. And then when reality hits, you're down like two trades that you weren't even supposed to take. Or this is the trade, this is the weak point or the weakness that caused you to once again lose another trading account. Because sometimes I've been caught up in certain situations in the markets where I'm like, man, I didn't even think fast enough to what I should have done. That's how fast the candle changed its trajectory, you know? So I'm letting you guys know these things because we're real traders. We go through a lot of circumstances on the charts, and nobody could tell us otherwise how you could have done better, especially if we're all talking in hindsight. So I would say just be careful when price does these type of things. And if it does, just stay away from the market as best as you can. You try for another attempt, it didn't work out, walk away. All right. It's not gonna get better that day. Even if it does, we pulling up another day. Do we agree with that statement?
Yep.
Okay, Alex Arnay, you made it. Good, 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 good. Yeah, as soon as I saw your text, I'm like, let me put my phone on D&D because I know you the type to call. Yes, sir. All right. So these are some of the nuances that I honestly felt were Achilles for me as a trader. I'm like, damn, I didn't see this choppy market coming. But in the midst of the choppiness, it's like, damn, what do we do? What do we do? Like, how do we anticipate this move? How do we, you know, limit the loss? And then sometimes we might get emotional. And those would be my weak points as well. I'm like, damn, bro, man, this thing was moving quite well. What happened? This, that, and the third. But the mechanical side of our thoughts should bring it down to this. Oh, the market conditions just changed. All right, let's try and hurry up and move that stop loss into profit. The best thing or the least thing that could end up happening is we get stopped out break even, or things start to change from a perspective that we didn't see coming. Let the risk management, the stop loss just hit. If not, leave it alone and walk away. All right. Because those are the best things that we could honestly react in a situation where the conditions change and we didn't see it coming, you know? So, what other reasons will you guys feel like sometimes the market had gotten the best of you? Does anybody want to share either via chat? What were some of the things last year that happened? You're like, bruh, I'm still working on this, or the market got the best of me when this and that happened. I'd love to hear a couple people, whether they want to unmute themselves or leave something in the chat. Yo, happy New Year, Natish, bro. It's good to see you, fam. Oh, you just pulled up, Brody? Well, we were just talking about that. We even made the reference of July with the India happenings that were going on. Yeah, the war definitely could make an impact, but we're not going to react so quickly, because many times we get a war announcement, instead of it buying, we end up seeing it selling off. the same way it did back in July. We even had that conversation together. It was so annoying too. We thought price was gonna buy from that. What was it? It was like an India. It was like, what was it, man? India or July. Oh yeah, it was the India launching missile strike back in India. I
To
mean back
Pakistan.
in May. Yeah, back in yeah. India launched a strike in Pakistan. And we was like, "Oh shoot, we know what this means." Whenever there's war, gold rallies, and then gold did not rally. And I was like, damn, that too was like a massive hit. Remember, Brody?
That was really crazy. It just took off that time. Like it was not coming back. It was not coming back from that state at all.
And then we thought, but it didn't. And it just sold. Tried to buy one more time, and then instead it just sold and sold
It
and
like
sold.
dropped pretty bad that time.
Yeah, I remember that. It was like Sunday, May 5th, we saw the rally, and then retest of the 4 hour high, sold off. And let me just reiterate what we were saying in the beginning. We need to be careful of when price, especially gold, comes back to retest recent 4 hour highs. Because as we would expect it to keep going, instead they will just um, failure swing to the upside and then instead sell off. One thing I feel like gold has done from time to time is like I'm expecting that buy to happen, not realizing like, yo, I still got to be locked in and be visually ambidextrous because I could have caught an even better trade that would satisfy my anticipation by expecting, hey, if price goes up to retest a 4 hour high and they can't, I'm taking a counter trade sell. And that same 1,000 pip move that I was expecting to the upside, I really could have caught it to the downside. So that's why I'm trying to just get y'all to understand, like, just keep that in the back of your mind for this year. Okay, guys? And the
Here.
second thing we said to keep in the back of your mind is what? The end of the month. End of month rallies. Like I'm okay if in the month of June, July this year, and like I see choppiness or I see price trying to, buy. I'm definitely gonna be looking forward to, counter sales. I'm not getting fooled this year about certain things that I'm expecting out of the market, and instead they're just not ready to commit until the end of the month. I remember there was a point in time I got a little winded by July because I would take beautiful trades to the downside and they would just wick out. Trades to the downside, just wick out. I'm like, damn, what the it was tough. It was tough. Gabriella said not waiting for more clear entry signals. Yeah. It's not easy, but it's costly if we don't wait for those. It's costly if we don't wait for clear signals. What else have we learned from last year, guys? Let's go ahead and have a quick conversation for I think we just focus on buys a lot, even when the market is just saying something else. Yeah, yeah. I think we're all at fault for that one for real. Especially when we know, okay, this is a bullish pair. Like, what the heck? Okay, yeah, all right, it's attempting to buy. And then not only does it not buy, but it keeps selling. You're like, nah, it's cool. It'll come back up. And it's like, oh yeah, okay. Another 400 pips. You still here? Yeah, still holding on. Okay, dropping another 300 pips, and you are in such drawdown. You're like, damn, I should have just closed. No, you weren't gonna close because we were holding on to hope. Holding on to hope. We're not gonna do that this year. We're gonna have a maximum percentage where we're like, bro, no matter how hopeful we are, we see a certain percentage, we bailing out. Agreed?
Agreed, man.
Yes, sir. Yes, sir.
Yeah, that shit sounds painful to even admit, but yeah. Yeah. Shit will break spirits, man. For real. Um, what else had happened? What else had happened? I remember this trade setup right here, October 24th. I'm like, finally, we coming down to retest 4 hour structure. And that's the thing. I'm not gonna lie, I admit to this one too. Like, I see a market retesting 4 hour structure for the second time in the end of the month like that. I'm like, yo, we about to bust all the way up here. Not even paying attention to the recent 4 hour structure high. I'm like, oh, that's nothing. They're gonna crush through this easily. Yeah. Yeah, for real. So I'm like, damn, you know what? I need to pay attention. Even if I believe price is gonna buy it, crazy. Uh, let's not be too hopeful and get ahead of ourselves. Because when this happened, I was like, huh? And it sold and it sold and it sold. And by the time the market was giving me another 4 hour entry, I even trusted. I'm like, nah, I'm gonna catch this, whatever, and I'm gonna be out. Um, so some of those things did give me like not FOMO, but not analysis paralysis, but I would get a little trigger shy. I want to swing, but the market doesn't want to swing. But when it does swing, I'm like, nah, see, I was waiting on you, but you wasn't ready. So I dealt with that last year for sure. I'm gonna give you guys an opportunity to share a bit of your experience, what you learned from it. Anybody want to go?
Yeah, I'll go. The biggest thing is there's always tomorrow. So, like he's saying, trying to hold that sell. It's like, get out when you hit your daily loss, and you always have tomorrow. And then number two, we saw how January f flew by so fast from last year. I don't even remember January of last year, honestly.
Oh
And so
God.
it's like, if you don't have the money now, if your biggest thing is you could trade, but you don't have the money, start a compound account with $100, $50, and compound it. And in December, you'll be in a completely different area, like a completely different place. So I forgot about compounding. Like they said, I don't even remember almost majority of last year. Bruh, I'm trying to tell you. So the two things, yeah, there's always tomorrow and compounding account if you don't have the money.
Thank you for that, Christine. You spoke in some gospel just now. I almost said amen. Um, yeah, sometimes we gotta just remember that there's always tomorrow. Always tomorrow. And the power of compounding. Yeah, you start out with a small account. Every time you got a little extra change, you want to add it to it, and then, not take big losses just so you could keep compounding and, have a pretty good account by the end of or at halfway into the year, this, that, and the third. But it all depends on what people are trying to do. I would say, and I know some people are probably going to ask me about the Fortune's funding launch. Um, you guys saw the announcement. It looks like there's going to be an extended, how do I say this? It looks like there's more effort to be made in dispersing the accounts because there definitely had been a huge amount of people who did sign up for the free account. And I was honestly telling James, like, I remember before the end of the year, I'm like, all right, guys, we don't need to be saying that we still have free challenge accounts to be handed out. And he was like, okay, agree, but disagree. I'm like, because we were noticing that there's like a lot of duplicates. So I was like, this is why I don't even think if somebody did not see the announcement just to keep posting it because we might have too many uh signups. But of course, on a business standpoint, sometimes there's no such thing as too many signups unless you have an issue of handing them out. So hopefully, from what I know, yes, it's the beginning of the year. A lot of the developers and team members were also on vacation, so things will be picking up by the 7th to literally uh, get things passed out. All right, the accounts passed out. And yeah, the whole goal was not to have people have more than one account from the challenge. And I also said that too. I be predicting a lot. When I'm having these group meetings with them, I'm like, yo, okay, let's not do this. Let's do this. Hey, do we have a metric to see if the same person tried it twice? Because every time we said, oh, free account, comment free, some people are thinking, oh, shoot, does that mean I can sign up again for, just to increase my chances? And I'm like, nah, if your name's already in the list, in a database, you're fine. You don't need to do that again. But some people are legit trying to do it so they can have two accounts. But the funny thing is you won't get two accounts. Yeah. Oh, you spam? My niggas, I ain't gonna hold you, Brody. I went crazy. Oh, we all did. That's crazy. I can't hold y'all. I can't even hold y'all. All right. But the truth, y'all went crazy. I can't say I'm not proud, but
Listen, my mama, my husband, my kid.
that's funny. So y'all was trying to scale up the 50K? Oh, that's what it was. Oh, okay.
See, and it all took me to say it first.
Right. Hey, you're the first clapper. Um, damn. So y'all coming out. Let me recording in progress this one real quick. Nah, guys. So because of that, let me just share with y'all what our group chat looks like. I was like, dog, it's only gonna be one account sent to everybody, by the way. So even if I appreciate that y'all actually did, apply pressure, but y'all only getting one per household. All right. Sorry to break it to you. All right, Christine, thank you for being on. Yeah, we're gonna stay locked in, guys. But so all right, so I'm getting this type of conversation going on. Hold on, let me stop recording for wait. Dang it.